Hello, everyone. Welcome to today's Decoded AI session. We're just going to give it a minute here before we go ahead and kick it off. And while we wait, go ahead and type in the chat where you're calling in from. Looks like we got everyone in from all over. I see some Texas, New York, everything. We're gonna go ahead and kick it off though as more folks come and trickle in. Hello and welcome to our Decoded AI and Treasury series. I'm Emily Flake from Treasury4 marketing team and I'll be your moderator today. We're so glad to have you here. Today's session is Data-Rich Payments, Building the AI-Ready Payment Rail. Before I hand it over, just a quick few notes. Today's session is being recorded and will be shared after the event. And for those tracking continuing education, today's session does qualify for 1.2 CTP credits, so make sure you stay until the end of the session. And if you experience any technical issues, please try refreshing or rejoining the session. And another reason to stay until the end of the webinar is that we do have some fun prizes to give away before Q&A begins, so make sure to stick around for that. And today we have three incredible speakers joining us, and I'll hand it off to Ed Berry to begin introductions.
Great. Thanks, Emily. Really appreciate the introduction and appreciate all the attendees taking time out today to really have a discussion here around payments and what's going on in the exciting world of payments and how does that intersect with AI and really the concept of data-rich payments. We've been talking about data-rich payments for a long, long time. I even hesitate to date myself, but even going back into the mid 2000s when the ISO standards were first coming out. But the idea of data-rich payments is more relevant today because of the potential of leveraging AI than it was back then, and how technology can take advantage of that. So today we're going to I'll introduce our speakers here. We'll talk about some of the shifts going on in payments and treasury, really dive into data-rich payments and real-time payments because I think they go hand in hand. And then what happens with when real-time payment rails meet digital assets? And then what are things that the attendees should be thinking about and taking back to their organizations in terms of tangible next steps to take advantage of this? We'll have a prize portal that Emily will drive, and then Q&A. And I do encourage everyone to contribute questions, put questions in the chat message so we can make this interactive as we're going forward. So I'm joined today by Tony Clark, who's head of corporates at Swift and works closely with the corporate community in North America and globally for Swift. Also joined by Rusiru Gunasena, who's Senior Vice President, Head of Business Development for Service Providers at the Clearinghouse. And I'm really excited to have Rusiru on the call and learn a little bit more about what the Clearinghouse is up to and really some of the adoption and activities happening around real-time payments. I'd like to add to that.
Oh, thank you. I appreciate the opportunity to participate, Ed, and looking forward to the conversation.
Great. Thank you. All right. So getting into it, what's going on in the world of payments and treasury? I think really we could probably have 30 key things happening, but really three key things. There's the march to ISO 20022. And at the end of the day, this shouldn't be a confusing term. Really what ISO, when you boil it down, it just means a richer data payload in a structured format. It's all about just providing deeper data, structured data as you process payments and take in things like statement reporting. But there's a lot of activities, lots of clearing systems moving to ISO as their native format, and a lot of business opportunities that are being unleashed from that. We have the move to real time and in real time payments, real time cash management, real time reconciliation. The close cycle for companies, it doesn't extend, it doesn't get longer, it's getting compressed. And so, what does that mean? How are we really operating in a 24/7 world here? And what are some of the things that are happening there? And then the AI opportunity. And so, kind of drilling into these a little bit more deeply, ISO's been around for greater than 20 years, or call it 20 years. I first started working with the standards on the statement reporting side, early days back in kind of 2008, 2009. And now it's, I'd say, really accelerating in adoption because of not just the statement side of it, which is really kind of after the fact, but the payments and payment messaging. And when we say payment messaging, it's really the PAIN or payment initiation 001 format. And there's lots of variants around that. Most recently, I think we're up to variant 13, but you see variant 3 and variant 9 used widely. But importantly, most of the global payment rails are using now the ISO formats, ISO standards as their native format, whether that is Fedwire in the UK, BACS here in the US now, real-time payments and using that rich ISO standard and then getting alignment around that. So I think that is going to, and that's really passing more and more data through in those payment messages and how you take advantage of it. And then, of course, real time. What's the key enabler for real time? It's APIs. Many banks are providing APIs. They're expanding their API library and marketplaces. They're working with technology vendors, whether it's treasury management system vendors, ERP vendors, even some of the procurement platforms that are out there to take advantage of kind of real-time information flow back and forth, bidirectional, and that real-time status messaging on the payment side. So being able to pass those payments over APIs, get back payment status messages with a deeper data payload around that, and being able to do kind of that real-time tracking, and then how that ties into actually real-time payments. And so I'll just get as an example, saw an issue in the last few weeks where an organization was doing a cross-border payment and didn't have visibility for 7 days, right? And so those are starting to become kind of outliers and versus where things are moving, which is real-time status messaging. And then AI and the AI opportunity, that rich structured data. And what is that structured data important? It gives context because every payment tells a story. The amount itself, the value, doesn't give all the context. It doesn't tell the story. It's all of that additional data, the beneficiary, the originator, the addressing, and importantly, the remittance detail, preferably structured around invoice numbers that are being paid for, as an example. And the more data that we have as an ecosystem and as a community, the more AI can do to take advantage of that for doing things like optimizing payment corridors, automating reconciliation, flagging potential fraudulent transactions, updating cash positions, again, all in real time. Tony, would love to get your perspective on these three areas and what are you seeing and what are you hearing from the corporate community?
Thanks, Ed, and thanks everyone for joining us. I think, Ed, with the three shifts redefining payments in Treasury, I think there is an overall shift, right? These are characteristics of an overall shift of living in a real-time world. The customer experience, the experience of payments holistically has changed. So from a Swift perspective, we've been working on the migration for ISO since 2017. So last year in 2025, we retired the MT103 in the interbank space, and we also introduced Fin Plus or Score Plus to corporates to be able to send payment initiations, Ed, to your point, using V9 through our Fin Plus channel. So we see corporates adopting ISO not only via Fin Plus but also FileAct. Corporates have been sending ISO via FileAct for over 10 years now. But I think the overarching message, right, is better quality data enables the move to real time, to the move to visibility. Having a payment, not having transparency on a payment for 7 days becomes the outlier, becomes the exception. So those would be the kind of key observations I see on this slide.
Great, thanks, Tony. Rosiro, what are your thoughts on these three shifts that are happening?
We clearly see a transformation, whether it's a consumer or a business or a corporate, really the behavior and the needs shifting to real time. Whether we as consumers today wanting our Grubhub or Uber delivered in real time, we also want to track that. Where is the driver? When are they going to arrive, right? So it is all around the data and the consumer experience that is very important even in the payments journey. So we definitely see corporates needing that data to make the right decisions. Sometimes they're really treating that as a more of a data conversion project, but it's not really, right? It is really a data quality and a transformation. So they also are struggling what ISO messages to use, right? Which data will I get from my institution, or what do I need to give my institution if I'm a corporate sending payments? So there is a lot to interpret as a corporation and make decisions. And sometimes these ISO messages and the data elements are hundreds. So for example, when we implemented the purpose of payment in RTP 5.0, we distilled down 200 plus purpose codes down to about 14 to start with. Otherwise, it's not humanly possible to interpret those. So corporates are struggling with that as well. So we as an industry, at least from the clearinghouse side, when we build the network and implement, we try to distill it down, simplify it, and really make it more practical. The ISO data elements that the corporates can use for their benefit, for their downstream systems to service their customers and work with the financial institutions hand in hand.
That's fantastic. I love or it resonates with me when you said there's so many ISO messages. Which ones do I focus on? Yeah, if you go to ISO20022.org and look at the full catalog, it's 700, 800, 900 messages. What distill it down? It's really a couple of key ones for corporates on the payment side. It's the PAIN 001 payment initiation, the PAIN 002 payment status message, and then the CAMT or CAMT 053 prior day statement and the 052 current day statement. So really, for most corporates, your journey in the ISO world can be distilled down to effectively four, maybe a few more than that, but those four key: payment initiation, payment status, and then the statements: current day, prior day, and approaching that.
That's right. I think I also sometimes take a very simple view of non-payment messages and payment messages, right? Because Paxo 8 is the credit transfer, that's the payment message. And the rest are really non-payment messages. And then RFP is a very important one, which is going to be a game changer, which we can get into. But they all carry data around the payment or the non-payment message, which it's important for the corporates.
And I think there's a little bit of thought that, well, all these messages, great, it's an IT project, but is it really an IT project? Yeah, the IT has to be involved to help get the messages flowing from systems to and from the corporate's ERP, treasury management, other line of business systems. But it's really a business issue at the end of the day. It's really a business need and business benefit. How do you frame that, Tony, when you're talking to organizations? How do they really consider the business benefits of it, or is it still viewed principally as an IT project?
I think we're working as a community to really expose the value that ISO brings. I think some organizations do see it as a compliance project, Ed. And I know we'll go into it later, but there are requirements that are changing for corporates when it comes to hybrid structured address fields. But no, I mean, I think when I talk to corporate treasurers, right, they all want the same thing. They want better STP rates. They want easier reconciliation. They want better fraud controls. And I think when ISO unlocks that value, so while it can be, you know, it can be a lift, right, from an IT perspective, but at the end of the day, it does bring value not just to Treasury but to entire organizations.
Yeah, agreed. All right, moving forward here, really what does data rich mean? So ISO 20022 is the overall standard, industry financial messaging standard. To distill it down, deeper data payload in a structured format. And I think the real big benefit is the more that organizations and the banks and the clearing systems and the payment rails support and pass through structured remittance information as part of that payment message, because that remittance details generally is most organizations do it as unstructured data. You might have abbreviation for invoice or invoice number, and try and jam as many invoice numbers in there that the traditional 140 characters support. But there's actually a really rich structure to it, and you can include things like deducts, partial payments, other reference information in there, and that really is one of the big unlocks in this idea of data richness. And really moving away from these free form fields to structured fields. Tony, you mentioned the addressing, which is going to be a requirement in November for cross-border payments. No more address line 1, address line 2, but actually street name, building number, town, city/town name, country code, postal code, etc. So there's a very structure to that. And then making all of that data enabled for downstream system machine readable, and driving automation around that. And then Ciro, you mentioned the purpose codes. Yeah, there's I've seen, I think in the most recent external codes list, 330 external purpose codes. Most of those are for country specific outside of the US. And so distilling it down to those 10, 15 or so that are really applicable at least in the US, and as it touches RTP. And then where does data break down today? Truncated data, you're trying to put more information in there, but it gets pulled off of the remittance detail. Free text fields that are subject to human interpretation, things like names of the beneficiary, inconsistent formats between domestic and cross-border processing, and then missing reference data, purpose codes again, but there's other things that can be used to drive auto reconciliation. So Tony, I'd love to what do you see and hear from corporates on the enabling capabilities around ISO, and what are the challenges that Swift is helping the community overcome from years past?
Yeah, I mean, I think it goes back to what I was saying before about, what the value of ISO brings to corporate treasurers, right? I think STP rates, we've seen them improve when a corporate moves from legacy MT to ISO. And I think in the last slide too, Ed, I mean, the real synergy and value comes from speaking the same language. So I think there's over 70 countries that are live on ISO. The domestic rails in the US are live on ISO, Swift's live on ISO. So it's really being able to interoperate and speak the same language. What we're seeing right now is because there are required changes, some corporates are struggling to update their back office systems to support, Ed, what you were referring to, right, as structured address fields. So Swift's introduced an AI tool that's free of use for the Swift community to help address some of those issues, to ensure that it's not just corporates, right? It's financial institutions as well, that all will be required come November 2026 to support structured. And when I say hybrid address fields, the requirement there is that you have to have a town or a city and country be in a structured field. So I think those are really dominating the day-to-day conversations I'm having with corporates, especially Swift connected corporates in the Americas region. But Raciro, I'd be interested to see what you're hearing as well.
We definitely see value in the adoption across, ISO across jurisdictions, but it also comes to the right data from the initiation, pass through all the participants in the ecosystem. I loosely use that word because sometimes there are multiple participants. It's not just a network in the middle. And then that data in that rich format getting passed all the way to the recipient or the end of that transaction. So it's really starting with the right data being input into the transaction, whether it's a payment or a non-payment message, and that getting passed through all the way to the end of that transaction. Certainly the structure is there. I think we spoke enough about the complexity. But again, if we can make sure the right data get in the right places and it get passed through, then the other challenge we see or we hear is the downstream systems, whether it's from the origination or the receive side, whether they are ready to take that data, interpret it in the right way, and make the right decisions. I think it's important to take those data elements, make better decisions, whether it's economic decisions, risk decisions, and really make sure that data is used for the benefit of the customers. So there is a lot more to go with just being ISO compliant, but it's also the right data getting in, passed through, and getting to the right place and getting interpreted right.
I think that interpretation is key, and that actually ties to a question that came in from one of the attendees, which is, does Swift see corporates use the ISO CAMT proprietary fields to help with codification and reconciliation? So as an example, in the CAMT statement, you can put in a BAI transaction code, you can put the ISO transaction code set of domain, family, subfamily, or you can put in the Swift legacy kind of fin transaction codes. And I've seen some banks only provide one of those codes, and some banks will provide all three code structures or even their proprietary code structures. So maybe, Tony, what do you see as kind of best practice, and how does that help corporates potentially with reconciliation?
I really don't have a comment on this, Ed. I would probably need to take this offline because one of the, I mean, the reason being is because corporates have been sending ISO messages in file act for 10 years, but Swift doesn't look at those payloads. So I have not really had mature conversations about the specific use cases like this one when it comes to codifications and recon. So Ed, you might be closer to this working, with corporates in that respect, but I'm always happy to take that offline to see if Swift could comment on that. But from us, we don't really look at the payload. That's more between the corporate and their bank.
Got it. And that's completely fair. I would just say, from sharing my experience in the US and with corporate treasuries, I'll just use an overused phrase. Instead of long live the queen, long live BAI, right? Everything is around BAI codes, all reconciliation rules, posting rules, GL posting rules. And so it does become a project to start changing your posting and reconciliation rules to say, I no longer want to use the 3-digit BAI code, but I want to use this potentially richer, more granular structure of the ISO 20022 transaction codes. And so I think there's an opportunity for organizations to work with their banks, but it kind of starts with the input, which is the payment, and then how is the bank then taking that payment, and what is their business logic to turn around and populate that transaction codes back in the statement reporting. So it's the industry can define a definition, all well and good, but it's really how the banks and the other systems are then converting everything and then mapping it out. So that's my observation. Great. So STP, a lot about STP rates. data quality, and I think really the idea with STP is a person doesn't have to touch a transaction. A payment gets ideally, maybe in a perfect world, the world of AI and agents, invoices get received, they match to a purchase order, they match to the beneficiary bank data, and then the payment it goes through it, compliance checks, probably automated. Payment gets initiated, approved, released, and then posted all the way through, and no one's having to touch it. I think we're still a long way from that aspiration. So there's still humans in the loop, people touching payments. But how does the industry drive more of straight through processing and that auto matching? And again, it all goes back to data. The more data that we have, the higher confidence we have in the data, the more automation and validation checks that can be done on data, whether it's clearing codes, purpose codes, identification codes that represent the parties, like using the legal entity identifier as an example, having standardization around how remittance data is put in. All of those things can be leveraged to drive straight through processing. Ciro, would love to get your thoughts on how the clearinghouse thinks about this and achieving more straight through processing, and what is there a vision that the clearinghouse has for helping the ecosystem and the community?
Definitely, it goes hand in hand with real-time payments because you have seconds to respond versus minutes, days, to respond to a payment. So we always encourage automation, no human touch. I mean, I don't want to even say minimize or less human touch because you don't have time for somebody to physically look at these transactions in a real-time world. Our transactions, though we have, 5, 10, 15-second SLAs, most of them get completed less than 2-3 seconds, most of the RTP transactions. So really that's automation is important and straight through processing is needed. And that all relies on the rich data in that transaction. You have to make risk-based decisions, economic decisions. Is it going to the right account? Is all the information necessary in place for me to send this transaction into the network? Then network makes certain decisions and send it to the receiving party, and the receiving party takes that transaction and do what they need to do with it. But it all revolves around the right data being in place to make those decisions and make that straight through processing successful. We're also dealing, I think, to this point and the previous discussion, we are also dealing with a lot of legacy systems which are built for batch processing, which we are making decisions the following day. We park transactions and have a team of 10 people who look at these and resolve these transactions. That luxury is not there with real-time payments. You have seconds, you have to make decisions, they are all automated, and that's where the data is important, and we have to make sure the straight-through processing is built in and it's organic in the system and the flow.
Yeah, thank you for that. I think that capture up front, that validation up front at inception of a vendor record, a customer record, their beneficiary bank data, and then the validations that happen around that, I think is very, very critical. So I think in continuing that vein, payments going real time, and with the RTP through the clearinghouse, other countries having real time instant payments and so forth, but statements haven't. And at the end of the day, all Treasury teams, maybe not so much Treasury, but certainly the accounting teams still rely on statements. And we're processing payments 24/7 now. And like you said, Ciro, every payments are being done in seconds and posting in seconds, but the statement reporting is still batch. Even current day is batch. Even via API, we're not really seeing instant statement reporting via API. It's still batch cycles. And then ultimately, when do you see it? Because the reconciliation is driven off of, for most organizations, the true prior day statement. So an interesting use case here is if you're processing a payment on a Saturday, when do you actually see it show up in your statement for reconciliation? Could be as late as Tuesday. And so there's a little bit of there's not just a little, I think a big breakdown here. Maybe Tony, what are you hearing from banks and corporates on the idea of statement reporting 24/7, or at least daily every calendar day? And how do we kind of close the gap here between this?
Yeah, I think you mentioned it previously, Ed, but I mean not need, but the instant cash reporting API. So Swift's been working with the community on creating an instant cash reporting API, which would be a community-based API. I know quite a few of the larger banks are offering, real-time APIs where you can get your statement balance immediately. But I think, Ed, to your point, right? Most corporates that I talk to still rely on statements. I think you highlighted, some of the gaps that still exist today. But yeah, I'll pause there.
I think the statement still drives the reconciliation in most organizations. Rosiro, how's the clearinghouse thinking about this? And maybe you could speak at your work with the maybe core banking system vendors, and how do you start moving them away from batch processing to real-time processing?
Happy to. I came from the industry, worked for one of the large core processors for 14 years before I joined the clearinghouse, so I'm quite familiar. We still, in our industry, in our country, we still have some core systems which goes to sleep in the night. So that doesn't work in a real-time world. When we talk about statements, I like to talk about these batch statements, even if it is once a day or once an hour, is not the way we should be thinking. We should be thinking statements in real time now. Because when a RTP real-time transactions comes into your account, it should be immediately reflected. So we at the clearinghouse, we continue to work with our participants, all the financial institutions. We have even recently put some display guidelines and rules, how a transaction should be displayed, what information should be displayed in real time for the customer. It helps with many aspects, including account validation and fraud mitigation as well. Because there is a myth around that, faster payments equal faster frauds. That's far from the truth, right? It's really the opposite of it. Largest fraud numbers come from checks, and the minimal fraud happens on RTP. So I would say really this mindset of batch statements should be really shifted to real time, and the records or the system of records should be updated in real time, where the customer can see what the context of that payment is. If something came in or if they made a payment, it should be reflected real time on their record. So that way, it's a real time statement. It's not a batch statement anymore. And the data is there. It's just the systems need to interpret that data and put it right into their system of record.
Yeah, I think the Treasury community and is really starting to think more about how similar experience on the banking data side, payment processing, statement reporting, like you would have in the apps that you put on your phone. That data should be flowing in real time, and you can see real time updates on when your driver is going to arrive when you're using one of the ride share services. And so, how do we get to that in the payment side of the world of the ecosystem, and then the statement reporting side? And I think
That's right.
one thing I would just say, if for any of the banks maybe on the call today, please encourage your to at least generate a statement, a prior day statement every single calendar day versus just business days, because even that helps out the Treasury teams and the accounting teams, knowing that they have a statement every single calendar day. So it sounds maybe basic, corny, but it is actually very, very helpful. Maybe Rosiro could talk to us about our real-time payments and how the clearinghouses are working with the banking community, with corporates, and what's happening there.
I will also take a 30 seconds and say a little bit about the clearinghouse. I think we have been in existence even before the Fed and run 3 major payment networks in the country. We run the CHIPS network, which is the Fed wire equivalent. We also run the EPN network, which is the ACH equivalent. And the latest network we operate is the RTP network. We have been operating it since 2017. And the RTP network today moves over 98, 99% of the real-time payments transactions in our country. So we have seen tremendous growth on RTP. We continue to grow month over month, quarter over quarter. What that tells us is certainly the demand is there from the consumer and the business community, the corporates, treasuries. With the limit increase we did to 10 million, we can see a tremendous growth in high value payments, how the corporate treasuries and others move, especially mid-month and end of the month, whether it's payroll transactions, whether it's really repositioning your funds where it needs to be. We see multi-million-dollar transactions happening with our increased $10 million limit on RTP. Also, real estate transactions is another good one. In the past, we might be able to do the down payment, but with the lower limits, they had to go to other means to complete the transaction. But today, you can complete the whole transaction on RTP, the whole real estate transaction, right, with the high $10 million limit. We also see wallet drawdowns being one of the top use cases, instant wage, earned wage access, where an Uber driver or a Grubhub driver work today, get paid today, so that they have money to pump gas tomorrow. When you look at industry verticals, we see tremendous growth in multiple verticals, whether it's transportation, whether it's healthcare, whether it's real estate. Different industry verticals are adopting real-time payments as they modernize their systems. Sometimes RTP is first and not an afterthought. Some of the new use cases, new industry innovations are real-time payments first. So they adopt RTP first. I've had conversations with some large corporates. They don't even use ACH as a payment mode. They don't think ACH is fit for purpose for their use case. Subscription payments are a good one. They also don't want to deal with plus day 1, day 2 cost, returns, reconciliation. With RTP, you know whether the transaction was successful then and there. There is nothing afterwards you need to interpret. You have to deal with returns and reconciliation. So those are some growing areas which we see. We work with corporates directly. We help through our FI participants, whether it's banks and credit unions, through them as well to their customers, to make sure that RTP can be adopted at scale.
Fantastic. Anything that has surprised you about the adoption rate on RTP payments?
Anything that surprised me when I sat on the industry side. So I worked for Jack Henry for 14 years, built a real-time payments practice ground up there. I was surprised to see when a financial institution goes live, the day they go live without doing any marketing, you see RTP transactions flowing into the institution. Their customers are going and discovering that they can draw down their Venmo, PayPal wallets in real time into the institution account, right? That was pretty interesting to see. And the customers themselves, they are even willing to pay the cost and draw down those funds back into the institution. If it's a small business, they have money in the institution account, they have liquidity. At the same time, the financial institutions benefit. They were faced with that deposit displacement issue. The deposits were sitting outside the institution. The relationship was outside the institution. Now they're bringing that customer back into the institution, that relationship back into the institution, and those deposits back into the institution. That was very interesting for me to see even before I joined the clearinghouse.
That's a great example. We do have one question that's come in from one of the attendees. How does the clearinghouse think about FedNow? Are you competitors or partners? Is it co-opetition? Like, how do you think about that?
Very, very good question, and I love this because I will again start from my Jack Henry days. I collaborated with the Fed. The Fed personnel flew almost every other month to Louisville, Kentucky, to meet with me and my team when I sat on the Jack Henry seat. Even joining the clearinghouse for the first 2 years, I ran RTP product and strategy before my current role. We collaborate with the Fed. I will tell you, even before I joined the clearinghouse gave the RTP spec and really wanted to collaborate with the Fed. And first discussion was, do we really need another real-time payment system in the country? Can we work jointly to have some sort of a redundancy instead of building another network, spending billions of dollars of taxpayer money? But that ship has sailed. And then even when I joined, we had monthly meetings, we collaborate on certain feature functionality. Can we align on certain things? It's a continuing discussion and a collaboration between the Fed and us. We are side-by-side operators of all the networks. They operate wire network, we operate the CHIPS network. We move a lot more money and a lot more cross-border payments with the CHIPS network. Same with the ACH equivalent, which is EPN, right? So nothing different when it comes to FedNow and RTP. We are always open. I know there's a long way for them to go to grow the network. There are growing pains when you build a network. We are quite familiar with that. So their priority is right now to get the network stable, and get some volume on the network. Certainly, we are open to more collaboration when the right time comes and when they're ready. But it's definitely a more collaborative approach where we work very closely with the Fed.
That's fantastic to hear. I think all the attendees appreciate the collaboration because it is an ecosystem and that need for collaboration, including with the core technology vendors, the banks, everybody. It's because and that's kind of Swift's whole background is and reason du jour of Swift is that collaboration and that community. So I think that's great. Shifting gears here, talking about AI and what happens and how can you leverage AI when you have the right data in place. And so these are some of the use cases that we're all seeing, I think, in terms of leveraging AI, which is changing by the day in terms of the capabilities of the tools and the agents and the use cases and the creativity that people are coming up with. But being able to look at all your supplier, customer, master reference data and making sure that you've enriched all of that. Auto reconciliation. I mean, the day when a human doesn't have to manually apply cash on an AR receipt, I think we're getting very much closer to that. Updating the corporate treasury's cash position in real time, and then having AI look for ways to optimize that cash position versus waiting for end of day statements or overnight statements. Certainly the compliance and fraud filtering in real time, being able to validate all of that information and through the different third-party services that are out there that banks and others are making available, and Swift included. Payment corridor optimization, and then RTP eligibility validation. These kind of 6 use cases here, anything that you think, Tony, that you see a lot of in terms of like a couple of these where corporates are really focused at?
I definitely think fraud and compliance monitoring. I think fraud's always top of mind when I talk to corporates. The auto reconciliation, absolutely. I think ISO is a huge enabler of better recon. And then, I always hear some, not always. Once in a blue moon, I'll hear a very specific use case of how ISO has enabled AI to help corporates better, with their forecasting. So this is a couple times a year I'll hear corporates say, we've saved XYZ of cash because we're better knowing where our cash is using ISO and AI. So I think with AI, the use cases will continue to expand insofar as, there's rich and structured data supporting those models.
Great. Ciro, anything that's coming up from that you especially gravitate to, or your clients that you're working with gravitate to on these AI use cases?
I want to touch on a few. So one, I think to my previous point around fraud mitigation, it's a matter of you have less time now to make decisions. So you can certainly use AI and better technology tools to make that decision. Again, with the right data, you enrich the right data to make that decision. And then the other one is certainly things are going to go bump in some cases. Then you could really get AI and other technology tools to help with whether it's reconciliation, self-healing. I think the data is there sometimes for you to really do those things. Um, Certainly, I'm also quite educated on the risks and the human validation part sometimes needed with AI. So you have to make sure that you tune your engines right, your input data is well understood, and the decisions you make out of these technology driven assets. I very generically use that word without saying AI because sometimes there's a lot which goes on with it. But as far as you know what is in your black box and what you're going to do with it and what spits out and what the downstream impacts are, I think you can really enhance the customer experience at the end of the day. That's the other thing I would add here. It's all about enhancing your customer's experience and making it better, right, than what was yesterday without those technology tools. If you didn't do that, you didn't achieve anything with it. So you want to make sure that you enhance your customer's experience with the technology assets you have.
I think that's a great point. I think you see that demonstrated with some of the big technology-enabled retail firms, retail organizations that really leverage technology and data to enhance that customer experience. I think that's just fantastic, bringing it back to the customer. So maybe switching gears here, we can't have a conversation about payments without touching on ISO, without touching on AI, and now touching on digital assets. And so, now thinking about that intersection of real-time payment rails, RTP, and others, and then how does that intersect with digital assets and on-ramping or off-ramping of that? So maybe, Ruchir, starting with you, what are you seeing, and how is the clearinghouse working with some of the digital asset infrastructure and service providers?
I will say you always need a on-ramp and off-ramp. So, and you need that in real time. And that's where RTP is capable of doing that. Today, the network is, mature, have the use cases, you see the volume on RTP. So we are very well positioned to support a digital asset or any other means of a medium with an on-ramp and off-ramp. The second thing is, I hear a lot of discussion sometimes, get a lot of questions around digital assets, stable coins, and so on and so forth. But my simple question is, if you have not even adopted real-time payments yet, which has been here now since 2017, I think before you talk about digital assets, which have a long way to go, still the market is not mature, the regulation is not mature. Everybody is trying to see what's going to happen with it. What are the use cases? I would encourage you to start thinking about what problem are you trying to solve with digital assets or stable before even you have adopted RTP. You first should go do that and get familiar with real-time payments and service your customers with what you have and what is real today, and then you are prepared for what is coming in future.
Yeah, that's a great point. I think we sometimes get ahead of ourselves and leap forward to the most current technology or capability out there, but taking it back to what problem am I trying to solve, and then does my organization have all the right policies in place to be able to then use the applicable technology so that I'm staying in compliance with that. So I think that's always something to keep in mind. Tony, any thoughts on, from a SWIFT perspective and digital assets and digital ledgers and so forth? I know there's a lot of work being done by SWIFT in this area, so I'd love to get a few thoughts from you.
Yeah, absolutely. And I mean, I wholeheartly agree with you, Rasir, that what is the problem that if it's a digital assets or if it's a real-time payment trying to solve. But Swift sees the future as multi-asset, right? So on one hand, I think the community is working to improve the existing rails, right? That could be with the introduction of RTP. That could be, Swift is right now working on a retail payment scheme to enable 24/7 cross-border retail payments. But additionally, it was announced at Sibos last year that we are extending our infrastructure and building a digital ledger. This is going to be a shared permissioned interbank ledger that records and coordinates payment obligations in real time. And so going back to the initial statement I said, what is this trying to solve for? It's unlocking and enabling 24/7 cross-border payments. And it's important, I don't these are complex and tricky subjects, especially when you kind of dig into them and settlement will come up, right? And Swift is not becoming a financial market infrastructure. We are just that ledger piece where settlement will still occur in existing RTGS or existing rails. So Swift has been designing our ledger with 40 banks over the last 12 months. We'll go live with an MVP this summer with a handful of banks. And that first use case is solving for 24/7 cross-border payments using tokenized deposits. So the future is exciting. And like I said, I think it's not one or the other. It's not digital assets or existing rails. It's just as Rusir, you were saying, right? With your partnership and collaboration with FedNow and TCH, it's not always one or the other. It's what is the problem and what are you trying to solve for?
Fantastic. Thanks for the update, and great to see the innovation coming from Swift there. A couple of things, and the slides will be available maybe just for the attendees on the corporate side. 5 questions to ask your banking partners. How your banks are supporting RTP, initiator, receiver. Maybe the status of their intraday statement reporting, what ISO fields are they passing through, compliance and fraud filtering on payments, and then APIs. What's your banking partner's API strategies? Any quick comments on this, Rosiro or Tony?
I think these are very valid questions to ask when you are, selecting banking partners or even with your existing banking partners. That really shows that you are forward thinking and wanting to do the right thing. Real-time payments is not new, not something which is coming. It's real. It's now. It's not a science fair project, right, anymore. There is real volume. We process over 2 million transactions a day, move billions of dollars. So these are absolutely the right questions to ask and see whether you can go live tomorrow. Because the other misconception is implementing RTP is another major project. It is not. Over 98% of the institutions are already technically connected to RTP. It's a matter of completing some paperwork and becoming live. You could start with receive if you're not ready to do send, whether it's your treasury platforms or whether it's your financial institution not supporting on the digital platforms the send use cases. You could start with receive and then start enabling send where it makes sense, working with your back office systems or digital partners, definitely. And then the data, I think I cannot stress enough to make sure that you have a right data strategy to make use of the data which comes in your payment or non-payment messages. You interpret the data right, display the data in the right places, in the right format, and give the full visibility, whether it's the ultimate sender, ultimate receiver, and everything which goes with it is very important. And also you pass that data into the downstream systems, whether it's fraud mitigation systems, whether it's your reconciliation and reporting systems to make better decisions all the way back time to a better customer experience.
Customer experience, I like that. Tony, maybe a couple of quick comments here on 5 actions on ISO 20022, things that should be on top of mind for corporates.
Absolutely. Top of mind, my recommendation would be what we were discussing before is the structured address field. If you are talking to your banks, if you're talking to your vendor, please have that conversation now, right? It's not just Swift that's going, it's also the clearinghouse and Fed come November 2026 that are going to require structured address fields. So that would be kind of the number one highlight. Yeah, I'm just looking at this. Yeah, have those conversations both with the banks and vendors to see how they'll support.
Fantastic. Yeah, lots of data to potentially update there. And then a couple of key takebacks to your organization. Leveraging the ISO standard. Really, Cyril, you had a great point there about your vision for data-rich payments and having a process and managing that data there. I think are all really, really critical, and Treasury needs to lead the way on that in terms of defining the business benefit for the organization. And then that really starts enabling the use of AI. People are using all sorts of AI tools and being able to really get more advantage from that. So we'll kind of skip through this one here so I can turn it over to Emily to hit our prize portal for the attendees. So Emily, take it away.
Perfect. Thank you so much, Ed. As he just said, before we jump into Q&A, we're going to be doing a really quick giveaway. We have some really fun prizes up for grabs. I'm just going to share my screen here. One moment. Okay, share. Let me know if you're able to see my screen. Ed or Tony or Rusuru, can you guys see the prize portal?
Yes.
Okay,
Yes.
perfect. So really quick, how it works, you're going to be looking at 4 mystery portals on my screen, and each one is hiding a different prize. I'm going to be picking 2 winners today, so make sure you keep your eyes on the screen. And I'm going to be going ahead and selecting our first winner. If you see your name pop up, just let me know which number, so which portal you would like me to open to see what prize you get. Okay, our first winner is Cynthia Hodge. If you can go ahead and type in the chat what portal you'd like. So I'm just opening the chat up again on my own screen.
I think she might have
Cynthia.
hopped off. I don't see her on here.
All right, I'll go ahead and pick another. Okay, we have Jennifer Albin. Jennifer, if you are here, please go ahead and type in the chat which portal you would like me to open. 4. All right, Jennifer, here we go. And you've won a $150 cash prize. Congratulations. I'll follow up with you after the webinar for your prize. And now I'm going to go ahead and quickly select the next winner. Okay, we have Lois Lee. Lois Lee, if you're here, please go ahead and type in the chat. Okay, door number 2, or portal number 2. Sorry, I sound like a game show host. Okay, Lois, you won a $150 StubHub gift card. Congratulations to Jennifer and Lois. I'll follow up with both of you on your prizes right after this webinar. I'm going to go ahead and stop sharing my screen so we can get back to the Q&A portion. All right, I can go ahead and read out a question here real quick for you guys, unless Tony or Rusuru, you see. I know there was a bunch in the chat.
I just
That
saw
maybe-
one digital ledger as in blockchain from
Mhm.
Eric, and yes, that's correct. Just wanted to clarify that.
Perfect. And then I see one from Andrew, have regulations been impacted by ISO and AI integrations?
I don't really have a comment for that, Rusir. I don't know if you do.
What's the question, Emily, again? Sorry.
How have regulations been impacted by ISO and AI integrations?
I don't know whether the regulations are impacted by ISO and I think the regulations are impacted by many other means in the ecosystem and the industry and folks who are contributing to those. My personal view, not necessarily it's this way. I think it's the other way around.
Yeah. Next question we have, what are the struggles that corporates are having with ISO 20022?
I think we touched upon that in the webinar. But yeah, I think it's right now getting up to speed on the rich and structured hybrid address or structured address fields. But yeah, I think we've covered that.
That's right. That's right. I think we covered quite a bit of points on that already. Maybe the question came before that. Again, the legacy systems, you need to be prepared. You want to interpret the data. You want to make sure you know the format and know that the data is coming or what data is needed if you're sending work with your financial institutions and your technology partners, and the list goes on.
Perfect. Next question we have, what is the biggest opportunity to apply AI in payments?
On one hand, I will say it would be great for you not to think about the payment. You don't need to know about the payment. Wouldn't you love your agent making all your payments out of your bank account and draining your bank account? But I am not going to do it. I'm not ready for it, for my agent to do those things. I don't use my self-drive on a Tesla yet because I was a programmer myself. I know how bugs work. There is no bug-free software. So that being said, I think you can use AI in payments today, whether it's fraud mitigation, whether it's reconciliation, whether it's when a payment goes bump. Can you do self-healing? Again, to improve the customer experience, you should use AI and other technology assets to make that user experience better.
Well said. Great.
All right, we are at the top of the hour here, so I'm going to go ahead and move to our final slide. We just want to make sure you know what is coming up next in our Decoded series. If you are enrolled in the series, you should have received a Zoom calendar invite. And if you are new today, feel free to register for upcoming events with the link I'm going to drop in the chat in just a moment. And that brings us to the end of today's session. Thank you so much, Tony and Bruciru, for joining us, and Ed, of course, as always. When the webinar closes, you will see a short survey pop up. We really would appreciate you taking just 30 seconds to complete it and make sure we are building sessions that are actually valuable for Treasury teams. And again, a huge thank you to our amazing speakers, and thank you all for being here. And do you guys have any final words before we close out the session?
Thank you. It's been a pleasure.
This was great. Yeah. Thank you very much.
Perfect. Thank you all.
Thank you. Bye-bye.